Has Auckland finally lost its stranglehold on the Kiwi housing dream? Is it still overpriced, or are people just over it? Are we witnessing the slow death of big city property hype, or just the world's longest hangover from 2021? Friend of the show, Westpac Chief Economist Kelly Eckhold returns with his latest economic report, which could make you spill your oat milk latte. If you like making money rather than watching everyone else do it, hit that subscribe button because the numbers don't lie. More investors are getting their New Zealand housing and real estate intel in 2025 from this show than any other YouTube channel. Kelly, has Auckland lost its grip on Kiwi property dreams?
Well, I think at this stage, Auckland, like most of the major urban areas, is lagging a little bit behind, I think, because it's still pretty tough times from most city dwellers and Aucklanders' perspectives. We're still in the middle of what's a pretty weak labour market, and it's going to be a while before we see an improvement there. They are benefiting from lower interest rates. So, we have seen a bit of a pickup in prices, but it's hardly boom times. But the real action, I think, is other parts of the country that are a bit more tightly orientated towards the recovery in tourism and also the primary sector.
Well, how is it that rural regions like Canterbury and Otago are outperforming the Auckland's the centre?
Well, I think you have to think about it from the perspective of incomes and employment. So, for example, if you look at some of the statistics on employment that were released this week, you can see that employment is growing, certainly more strongly in some of those kind of rural and tourism-based areas, and in particular the South Island is a strong point there, whereas in Auckland, not so much, because we're still waiting for a lot of the benefits of those interest rate cuts to really flow through here.
So are we seeing a resurgence in these regional areas, and Auckland's really starting to suffer from, is it an oversupply of new builds, or?
Well, I think there is certainly a lot of supply of property, and I think that's kind of like equally the case for most parts of the country. My perspective on this is that in New Zealand, we often see some leaders and laggards in the property market. So there'll be parts of the country that do relatively well for a while, and then everybody else catches up. And I think for Auckland, we're waiting for the catch-up period as those lower interest rates really ultimately filter through. Interesting little statistic was that the Reserve Bank released the data on the amount of interest paid by New Zealanders in the last quarter. And that data suggests that Kiwis are finally paying lower interests now than they had been for the last few years. And that's because people are moving on to those lower fixed mortgage rates.
Well, what does it mean for New Zealand's economy if Auckland's kind of stagnating? Certainly there's a lot of concern about what's going on in Wellington. Property prices have dropped significantly and no rebound in sight there. And Hamilton, seems like the council has made announcements recently that development has been paused, until further notice. What is the impact on the New Zealand economy when those major centres suffer?
Well, I think we've still got the view that unless something really bad happens, a recovery will continue, but we shouldn't expect a boom. And that is equally the case for the housing market as well. For example, our forecast for house prices over the course of this year for the country overall is about a 6.2% increase for the year. That's a little bit below average because that's essentially what we're forecasting is that a recovery to an average, which isn't necessarily that great. I will say, though, that there's tons of risk out there at the moment. Anybody would have seen the news coming out from the world about tariffs and revisions down to global growth. That is a downside risk that could ultimately impact everybody if it materializes.
So is this kind of like a slow, silent collapse for Auckland where, New Zealand's economy over the last sort of 20, 30 years, I guess it's been made up of Auckland 30, 40% towards New Zealand's GDP. Are we going to see that ratio shift down?
I think it's more just a question of the phasing. So as I was saying before, I think we're going to see the economy and housing prices improve more quickly in some of the regional kind of like centres. but then Auckland will ultimately catch up. I wouldn't really categorize it as a collapse. It will be a increasing house price. It'll probably increase relative to the rate of aggregate GDP growth, so that ratio will stabilize. But I don't think we've got a strong case for a boom at the moment, unless something happens to really G that market along, for example, a lot of Reserve Bank interest rate cuts.
Yep. And how's this tourism dividend playing out? Is it Auckland benefiting the most, or other parts of the country?
Oh, it's other parts of the country, and particularly down in that South Island area. A nice little factoid to keep in mind is Queenstown, where the data on international arrivals into Queenstown has risen quite sharply through March. It's a little bit out of season in that regard, and that's basically an indication there's lots of Australians coming here for holidays in Queenstown right now.
So, I mean, this age-old question: is it a good time to buy property or not?
Well, I think when you've got interest rates down as far as they are, and with the pundits suggesting that there could be scope for further declines yet, there certainly is a good case for making sure that you're invested, although making sure that you're not paying too much, because there is plenty of risk out there in the horizon right now. I mean, it isn't impossible that the unemployment rate takes a little bit longer before it settles at a peak and starts to go down. That could happen, for example, if global growth really translates to a lot of weakness in the domestic economy. So that's something I think everybody needs to have an eye open for.
Just a reminder, your competition is already subscribed to the fastest growing property and investment channel in New Zealand. That means they're getting the insights first, making the moves first, and locking in profits while you're still debating whether to click a button. Be smart and subscribe. And if property prices do increase, and that's the trend, who actually wins? Buyers, sellers, the banks, the government? Like, what's the result of a property market going up?
It's generally beneficial for many people because a lot of sectors generate activity off the back of the property market. So, the way that we usually think about how the transmission mechanism of lower interest rates to the broader economy works is that it encourages people to buy houses, so the prices go up a bit. That then encourages residential construction. Also, when house prices are going up, householders generally feel a bit more wealthier as well, so they spend a bit more, and then that filters through to employment trends more broadly in the broader economy. So I think that's sort of like the way to think about it. If you want to think about a loser, well, if if we end up in a situation where house prices rise relative to incomes by very much, well, then who loses there is the younger people, the people that don't already have property or are still trying to save for one. And I would argue that that's not really a scenario that we're looking at now. The forecast that I'm discussing with respect to a gentle rise in house prices wouldn't really mean that house prices to income rise very much at all. So it's not making that cohort of people much worse off compared to, for example, what happened in 2020 and 2021, where the property market went crazy and incomes just couldn't keep up.
So, what is the key indicator for you where a market goes? We were in a period of fear of overpaying. Before that, there was a FOMO. Now, when are we going back into this FOMO market? What is the key indicator you're looking for? Is it the total amount of listings, or what should we look out for?
For me, there's a couple of indicators to keep an eye on. Firstly, there's kind of aggregate credit growth, because that gives you an idea about whether the money supply, the credit sort of like demand is expanding at a decent clip. And some of the recent trends there in the housing market have been pretty encouraging in that regard. We, for example, saw quite a strong increase in new mortgage lending in the March statistics that were released this week. But in terms of the kind of like aggregate housing market trends, the focus is really on house sales. Do those sales remain relatively strong? You know, they're basically sitting at about average or slightly above average levels at the moment. Where house sales goes, so usually does prices. But I'm also looking at the amount of time it takes for a house to sell as well. So days to sell in the market is sitting around about 48 days at the moment, which is at the upper end of the historical range. I'll be looking for that number to head down to perhaps the sort of like low 40s or high 30s, to be pretty sure that the sort of 6 to 7% house price forecast that I've got is something that is going to pan out.
Great. And with the OCR, how's your prediction on where we're going to end up as a low point changed in the last month or two?
The forecast hasn't changed, but the risk has. And we're in the process of working through those risks now. Right now, I've had a view where the OCR finishes up at 3.25%. So that's a rate cut in May, and then nothing else after that for about a year when rates might start going up again. With the slowdown in global growth, I think there is an appreciable chance now that interest rates go a bit lower than that. And certainly I think the Reserve Bank is probably going to continue to move slowly in that direction as long as they remain uncertain about exactly how the weakness in global growth coming from tariffs is going to translate through into New Zealand. I guess, though, what we don't really know is, firstly, how long is that slowdown going to be? There's a lot of changes in policies going on around the world with respect to tariffs, which means that the end state may not be as bad as what many people fear. And we also have to consider whether it significantly impacts on New Zealand. And in that regard, I'll note that things like dairy prices and commodity prices more generally have not fallen in the last few weeks as all of this bad news has hit. Indeed, they've actually gone up a bit as well. So if that's going to continue to be the case, it may well be that we can skate through this without too much negative impact on the broader economy, and therefore not as much need for interest rates to go a lot lower.
Yeah, well, they can't be criticized for not taking action, I guess. With Auckland investors, are they still hesitating even with these 4.99% interest rates, or are we now starting to see the lower interest rates is triggering some action?
What I see at the credit statistics is that investors are getting increasingly interested in the market. Investor housing has been pretty dormant, I think, for most of the last few years, as particularly the impact of those previous tax changes, which made it harder to deduct interest. The bright line rules really started to bite and investors pulled back from the market. Well, those rules have all changed now and the interest rates have gone down. So what we tend to see that out of aggregate housing market credit growth, a disproportionate amount of it is being driven by the investor sector. It's coming from quite a low base, as I said, but it is actually growing relatively strongly. So that tells me that there are investors out there that are looking for a bargain.
And how are the first-time buyers reacting? Are we seeing a lot more interest now? It is a big drop from, say, 5.5% rates to 5% rates. That does make a massive impact in repayments. You're seeing more interest at a Westpac level, or just in the total numbers from first-time buyers?
In the aggregate numbers, we see that first-time buyers are still adding to credit growth, but not as strong as is the case in the investor segment, or in that segment of people that already have a house, but are perhaps looking to trade up to something else. That second segment is actually the biggest individual component of total credit growth, and that's contributing quite strongly in dollar terms. But the real growth seems to really be coming more from the investor segment right now.
And with the construction activity, more specifically in the residential side, what differences are you seeing with what's going on in Auckland versus the rest of the country? Is Auckland falling behind there, or what's going on?
Well, I think in general, construction's actually running at pretty low levels, and that's consistent with the fact that consents have been running at quite low levels now for about 9 months. Construction activity is now skating along the bottom of the cycle. We can see that reflected in things like employment in the construction sector, where the construction sector is by far and away the weakest sector with respect to jobs. There's no jobs growth there. Jobs are declining, in fact. And a lot of people employed in that sector, I think, are moving overseas to try to take a hold of better opportunities. That situation is going to probably remain the same until perhaps the end of this year, the second half of this year, after the interest rates have really sort of like been down for a while and you start seeing consents pick up and then construction activity starts to pick up.
A final reminder, your competition is already subscribed to the fastest growing property investment channel in New Zealand. That means they're getting the insights first, making the moves first, and locking in profits while you're still debating whether to click a button. So be smart and subscribe. A reminder again, money moves fast and the investors making the most of it are here. This is the fastest growing property channel in New Zealand for a reason. If you don't subscribe now, just know that someone else is already using this knowledge to make their next deal while you hesitate.